So Netflix walks away from Warner Brothers Discovery, and somehow that makes the situation more chaotic, not less.
Because now everyone's whispering Paramount-Warner Bros. Mega merger, and the antitrust people are already losing their minds.
Which, okay, combined studios, cable, streaming, that's a monster.
It's not a monster, Nate. It's a regulatory nightmare dressed as a strategy.
Same thing in media?
And then there's Ben Affleck selling his AI startup to Netflix.
I cannot.
You cannot, but we have to talk about it. The rundown?
Okay, ProAmpac swallows TC Transcontinental's packaging division. Flexible packaging, huge footprint expansion. I know that sounds boring, but this is a company that wraps everything you eat.
It is boring, Nate.
It's cash flow, Maya. Unglamorous, beautiful cash flow.
Fine. Moving on. Star Fund XII is acquiring Lonza's Capsules and Health Ingredients division. And here's the part that actually caught my eye. Lonza keeps a 40% equity stake, so they're selling but not really selling.
They want the cash and the upside. Classic, I want to break up but still text you deal structure.
That's the most accurate description of a retained equity stake I've ever heard, and I hate that.
The Telegraph sold to a German buyer for £575 million. British National Institution, German owner. The British press is going to spend the next decade writing furious op-eds about this in a newspaper owned by Germans.
The irony writes itself. Okay, here's one I genuinely didn't see coming. Jollibee, the Filipino fast food giant, is dropping $87 million on a South Korean hot pot chain.
Jollibee is out here building a pan-Asian food empire and nobody's talking about it.
They've been on an absolute acquisition tear. This is not a one-off. I'd actually watch this company closely.
See, I'd push back a little. Hot pot is a dining experience. It takes time. Jollibee's whole DNA is fast, fun, affordable. These are not the same customer.
Fair. Brand extension risk is real.
And then there's KKR, seeking a $500 million loan to buy into XCL Education in Singapore. Private equity, leveraged bet on Southeast Asian EdTech, very KKR.
Debt-funded education acquisition. Nothing could go wrong there.
Nothing at all.
And look, we have to mention Ben Affleck sold his AI post-production startup to Netflix, which means we needed to dedicate actual time to unpacking what is happening in streaming right now. Because Paramount, Warner Bros., Netflix, it's all connected.
And it is a mess. A beautiful, litigious, antitrust-flavored mess.
That's next. The big one.
So Skydance pulls it off. Netflix walks, Paramount goes to David Ellison, and now everyone's asking the same question.
Is this actually a Paramount deal, or is it a Warner Bros. Discovery waiting room?
Right, because the minute Skydance closes, the conversation immediately becomes, okay, what about a Paramount-Warner merger? And that's the real story here.
And I want to be precise about this because people are collapsing two separate things. Skydance buying Paramount is one transaction. A subsequent Paramount-Warner Bros. Discovery combination would be a completely different animal. We're not there yet.
We're not there yet. But the logic is screaming at you. You've got two legacy studios, both carrying debt, both trying to compete with Netflix on streaming, both owning massive cable assets that are slowly bleeding out.
Sure, the logic is there. The regulators might not be.
Okay, fair.
Antitrust experts are already flagging this. You'd be combining studios, cable networks, streaming platforms. The combined footprint would be enormous. We're talking about one entity controlling a genuinely disproportionate share of premium content in the US.
Which, honestly, is the same argument that got made about every media merger for the last 15 years, and half of them still went through.
Some of them. And some of them produced disasters. Anybody want to talk about how the Warner Discovery merger itself went?
I mean, Jojo, no. Nobody wants to talk about that.
Nobody wants to talk about that. They wrote down billions, gutted HBO projects. The stock got crushed. So the idea that adding Paramount to that situation is the clean fix.
I'm not saying it's a clean fix. I'm saying the alternative is both companies slowly losing altitude until someone has to make a move anyway. Sometimes a messy merger beats an elegant decline.
That's almost poetic, Nate.
I have my moments.
Here's what I keep coming back to, though. The deal structure for Skydance Paramount is still fluid. We don't know what antitrust conditions get attached at this stage, let alone what a Warner combination even looks like structurally. Who's the surviving entity? Who carries the debt? Who gets to run the thing?
David Ellison just won a bidding war against Netflix. I don't think he's thinking small right now.
No, he is absolutely not thinking small, which is either exciting or terrifying depending on your risk tolerance.
Both. It's both.
It is both. Okay, speaking of things that are both exciting and terrifying, the Telegraph just sold to a German buyer for £575 million, and I have thoughts. Voices.
Okay, so antitrust experts are already sharpening their knives on this Paramount-Warner Bros. Situation. And honestly, I get it.
The combined entity would be massive. Studios, cable, streaming. We're talking about a company that touches basically every screen in America.
One analyst put it pretty bluntly. The regulatory hurdles would be significant, which in antitrust speak means good luck.
And yet, Netflix just walked away from the table. So the field is narrower, Paramount Skydance is the winner, and now everyone's asking, does a Warner Brothers merger actually happen, or is this just banker fantasy?
Banker fantasy is my specialty, so I'm qualified to answer. It's probably 60% fantasy.
Generous.
Maybe. But here's what's interesting. While everyone's debating Hollywood, India's central bank just quietly made a move that could reshape an entirely different deal market. They're now allowing lenders to finance up to 75% of M&A deals where an acquirer already holds control.
Which is a big number.
It's a huge number. Market watchers are reading it as a direct push to accelerate domestic consolidation. India basically just handed acquirers a lever.
And nobody's talking about it because Ben Affleck sold an AI startup to Netflix.
Priorities.
Okay, but the PayPal angle is the one I keep coming back to. Analysts are flagging it as a takeover target because the stock has been struggling. But they're also saying the payments infrastructure is still genuinely valuable.
Which is the classic, the business is fine, the stock is the problem setup.
Right. So who bites?
That's exactly what we're watching for. A named bidder, a formal approach, something concrete.
Speaking of concrete, let's talk about a deal that actually closed. Spill the tea.
Okay, Ben Affleck. Ben Affleck is now an AI startup founder who just sold to Netflix.
I genuinely had to read that headline 3 times.
The man went from Daredevil to Oscar winner to Duncan spokesperson to AI post-production entrepreneur.
And Netflix just wrote him a check, just like that.
I mean, it's Hollywood buying Hollywood. At least it's on brand.
It's extremely on brand. I'm less interested in the celebrity angle and more interested in what Netflix actually paid for here, because nobody's talking numbers.
Undisclosed deal, very mysterious, very artsy.
Which is either because it's embarrassingly small or embarrassingly large.
With Ben Affleck, somehow both feel equally possible.
Fair. Okay, shifting continents entirely. Luckin Coffee is reportedly looking at overseas acquisitions.
Oh, this is the one I'm excited about.
They went from accounting fraud scandal to the dominant coffee chain in China. Now they want to expand internationally?
That's the glow up of the decade, honestly. And look, they have a model that actually works for fast, cheap, high volume coffee. If they come to the US,
American consumers are going to learn very quickly what a $4 latte really costs to make.
Starbucks is already struggling. Luckin shows up with aggressive pricing and an app-first model, and suddenly it's a whole different conversation.
I'm not saying it works. I'm saying it would be genuinely fascinating to watch.
Which is exactly what we said about their accounting situation in 2020, so...
Noted. Speaking of situations worth watching closely, the Paramount-Warner Bros. Picture is getting messier by the day, and we've got a lot to unpack there. Tomorrow's radar. Okay, before we wrap, what are you watching tomorrow?
Honestly, any regulatory noise around the Paramount Skydance and Warner Brothers Discovery situation, antitrust experts are already flagging serious hurdles given the combined footprint across studios, cable, streaming. It's enormous.
I'd push back slightly. The opposition feels early. Deal structure is still fluid. I'm not sure anything crystallizes tomorrow specifically.
Fair. But that's exactly when you need to be watching. It's quiet until it isn't.
That's Annoyingly wise. I'm also keeping an eye on PayPal. The takeover rumors are getting louder and we still don't have a named bidder. Stock's been beaten up enough that someone serious has to be circling.
A payments giant going cheap. Classic.
And the new vein fund merger, BXMX and DIX combining into SPXX, March 30th, effective date. Watch for SEC activity leading up.
3 things. Big day.
Could be. Speaking of big, Ben Affleck sold an AI startup to Netflix, so
That's next segment. Trust me, you want to savor that one.